Oil prices spent the last two trading sessions streaming early losses. Today, the quotes have stalled, consolidating at the levels last seen on August 20. Now, let's discuss how to interpret this pause as a break before a further rally to the new peaks or as a sign of a potential reversal. First of all, it's worth paying attention to fundamental factors. Oil traders are wiring data on crude oil stockpiles from the U.S. Department of Energy. The report showed a drawdown of 10.6 million barrels, while experts predicted a more modest reduction of 3.3 million barrels. In addition, concerns about crude supplies in the market are raising expectations that major oil producers Saudi Arabia and Russia will extend voluntary output cuts. At the same time, the market is witnessing a rather restrained rise in oil prices. From a technical point of view, Brent crude oil futures have slowed down the pace of the upward cycle at around the 85 and 50 mark. To extend gains, the asset needs to overcome the resistance level of $86 per barrel. In this case, the volume of long positions will increase, thus bringing the quotes up to $88 per barrel. The high of the medium-term trend, otherwise the current stagnation may turn into renewed selling. After all, oil prices are still under pressure from reports on the economic state of China. The world's largest energy importer, China's economy cannot yet achieve the previous heady growth rates, although the country's manufacturing contraction is easing. Likewise, the United States, the largest oil consumer, cannot boast the swift pace of economic growth. The U.S. economy is growing, albeit at a slower than expected pace. By the way, disappointing data on the U.S. GDP contributed to higher gold prices as investors assumed that the Federal Reserve could end its interest rate hiking cycle. A weaker dollar and a decline in the U.S. Treasury yields also helped the metal rise above $1,940 per troy ounce, pushing it up to a new one-month high. Technically, gold futures have added nearly 3.5% in just a week and a half, and this rally is seen as inertial, which may indicate a potential shift in the market sentiment. If speculators ignore technical signals about the assets of a bought status, the yellow metal will likely extend gains, heading for $1,985 per troy ounce, the local high posted in July. Speaking of the Russian currency, the dollar is trying to recover to 100 rubles per dollar. The quote managed to stay above the mark of 96 rubles despite the ongoing information pressure. However, we cannot say for sure that the dollar will recover. Experts may step in and start selling the currency at any time, thus limiting its bullish run. The market may eventually face a sell-off, which could drag the greenback down to at least 94 rubles. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. And see you soon!